everyone. Welcome to Retire with Style. Alex and Wade is in the land of the rising sun, in Japan, doing his yearly pilgrimage. I don't know where. I want to say Osaka because it sounds kind of cool, but I don't think it's there.
No, I think it's just outside Tokyo, if I remember correctly. So,
Yes, something something prefecture. And I'm here, as you can see by Bob's grimace. I'm here with our fan favorite, Bob French. And today we're going to be talking about the election and the stock market, right, Bob?
absolutely.
All right, all right.
Yeah.
So what do you got for us? What more or less are we going to cover here?
Yeah, absolutely. So, obviously, right now, especially, this is a topic on a lot of people's minds for really good reason. It's kind of all we're starting to hear about. We're starting to get into the actual campaign season. So it's really top of mind, and we're starting to see a lot more questions about what happens if Trump wins or Biden wins, or who knows what happens. All the different permutations. Because there is a lot at stake in this election. There is a lot of things that are going on, and they have pretty darn different approaches to how they want to address that. And a lot of people are looking at that from a lot of different angles, but one of them being their investments, their retirement. How is whatever happens going to impact what the stock market and their investments is going to be doing.
Okay,
And
go on. You were
we
saying something.
wanted to just kind of talk through that, to kind of walk through, hey, here's how to start thinking about that. Here's some different ways to kind of contextualize what's going on, from that pure investment standpoint, but also thinking about it from, that retirement planning standpoint.
I think it's excellent. One thing I would say is that this is kind of a Groundhog's Day episode, but it doesn't happen every day. It happens every 2 years because the midterm
Every
election
2
cycle as
years.
well. That being the case, though, a couple of caveats I want to lay out there for everyone listening in. We're going to have some sort of we're based out of DC, right? McLean, Virginia is effectively Greater DC, and if you want to see us tightrope around political issues and not talk about them while talking about them while not talking about them, well, we've been doing this for a long time, and we never win. You never, as an advisor firm, you never win. Taking some sort of side. Yes, we're human beings, and we all have our own proclivities. But we know, as it relates to talking about these things, it's never a good outcome saying, hey, I'm not going to vote for the crazy guy. Now, I'll give you an example. No, if you think it's Biden, you're on one side. If you thought when I said crazy guy, you thought it was Trump, you thought, it's, who could it be, right? And so those are the things we try to just separate ourselves from, because it's just a difficult conversation in that sense. Now, what we can do in terms of remove this sort of emotional link is just look at the numbers, frankly, and that's what we will be doing. Now, even though we will be looking at the numbers, there will be some people listening, Bob, that will say, excuse me, I have a terrible cough, that will say something along the lines of, yes, but the way the current economy is going, such and such will happen, and that's unsustainable. Now, you have the other side that will say, yes, but if we don't continue the policies in place and we let this other person take over, it's going to derail everything that was heading towards a positive outcome, and we're going to take 5 steps back, and that can't happen. That's
Absolutely.
that emotional connection. How would you address that? Because that's very real.
Right.
Because when we talk about numbers, I don't want to come across as tone deaf. Like, yeah, I
Absolutely.
get that historically, but man, did you just see what happened last weekend?
Absolutely.
That kind of thing.
And the stakes certainly feel very, very high at this point, especially with this election and the choices that are in front of us, as a country. So I don't want to make light of that. there's a couple things that I'm thinking about as we're looking at that. One is there's certainly a bit of a recency effect here. We're looking at this, we're in this right now. And, like I said, there are some pretty stark choices. However, we've said that for pretty much every election for
What
a
is
while
the
now.
recency
Please.
effect? Just introduce the recency effect and then
Absolutely.
go into your
So,
thing.
what I'm getting at is, we just psychologically tend to focus and almost fixate on things that have happened recently, things that are currently happening, things that are basically easier to remember to a very large degree. And we inflate the importance thereof. So things that have happened more recently, things that are happening now, we tend to think they're more important than something that happened 20 years ago. And sometimes that's true. Sometimes that's absolutely true. But it's always something that's really important to kind of keep in mind, especially as we're looking at something that we do have some historical data on this type of stuff. We do have some ways of viewing what might be going on here. The other thing I'm going to call out, there's two pieces to this. The first is we're talking about the stock market here. So we're not talking about the broader economy. Now, they're definitely related. Over the long term, they're going to be tied. But they're not exactly the same thing. They're not going to be kind of moving in that same lockstep. Now, the other piece of that is that because we are talking about the stock market, all of this data, all of this stuff we know, or we think, or we expect, is already in prices. It's already included in how the market has already moved. And we'll talk about this a little bit later on, but we can actually see this really clearly when we look at the market returns the day after an election. There's actually a negative correlation on the absolute value, how much the stock market moved the day after an election, with how big the margin of victory was. So a bigger margin of victory for whoever happened to win. I was looking at the presidency, whoever won the presidency, the bigger the margin of victory was in terms of popular vote percent, which obviously there's some conversations there. But if there was a big margin of victory, the stock market didn't move that much the next day, which seems to suggest, they kind of expected what was going to happen. So that was already priced in. And we can see that across any number of elections that we look at. If the market is constantly incorporating that new information, both in terms of who's going to win, which I was just talking about, but also what's going to happen if they win. They're looking at kind of the expected value, if you will, of what will happen if someone were to win. So the market is already incorporating that information. So trying to move your portfolio based on what you are currently expecting right now, it's the same issue you have when you're trying to time the market based on what you know right now on anything else. Unless you personally have some way of really understanding this better than everyone else, it's going to be a pretty tough thing to be doing there.
Real quick, so when Dewey defeated Truman, how much did the stock market move?
As soon as you started saying that, I knew I should have had that spreadsheet open. But that one, I believe, was one of the bigger ones.
Oh, was it?
I believe so. And there were some where the market basically didn't move. Some of the bigger ones. I think when Reagan won, the market didn't have a big day. That next day, because it was not a surprise.
So it's
Everyone
probably
kind of knew that was going to happen.
so it's probably fair to say there'll be some if the elections were held tomorrow, there'd be a big swing
I
because
mean, yeah,
it's kind of a
I
split
would
thing,
imagine
right?
so.
Right.
All the numbers are saying, it's pretty darn close to 50-50 at this point in time. Or at least there's a big degree of uncertainty
Yeah,
as
yeah. That's what I was
to,
getting.
what's going to be happening. So obviously, everyone listening to this, looking at margin of victory, because of how we do elections, that's not a perfect proxy. But, for our purposes in terms of talking about this, it's good enough for what we're trying to talk about here.
So then, Bob, just to make that bring that statement hold a little bit about
Please.
how close elections, kind of bit more volatility, elections that are more known, that that Reagan Mondale, you kind of know how that story's going to end a month before the election. So with this one in particular, how does that? Why would that be? And I think the dynamic about how market prices reflect current information
Mm-hmm.
is priced in. It's kind of a running tally, and then it's the unexpected information that comes in randomly that begins to move the needle, right? And so
Absolutely.
what is that leading up to the election going to look like?
Well, I mean, one of the things we're going to be looking at is, campaigns, political campaigns are, if nothing else, just big information machines. They are constantly spewing out all sorts of information, both good, bad, just random noise sometimes, that everyone is going to be kind of looking at and making their expectations off of. So people are, as things happen, that's going to change the probabilities of success. You can kind of look at, 538 is, still around. There's the Iowa electronic betting markets. There's all sorts of other things you can be looking at to kind of get a gauge on, what's going to be happening. And, as things happen, those are going to be moving around. Those are going to be, proxies for what people think is going to be happening. And that information in turn is going to be, pushing markets one way or the other. But, to the bigger question, campaigns are semi-random. There's a lot of stuff that's just going to happen that is wildly unpredictable to everyone, just like the rest of the time in the stock market. And that's something that I think is really, really important to remember as we're kind of looking at this type of stuff. That, and we can do this a little out of order. One of the things we've been seeing when I look at this, if we look at kind of the campaign season, so, kind of that summer up until, end of October.
So where we are right now, effectively.
Where we are right now, exactly. We're that's one of the reasons we're doing this right now, because we're jumping into that beginning of the campaign season. During election years, that has a significantly higher standard deviation than any other point in time, or than the rest of the non-campaign season and the non-election years, because there is just so much concentrated new information happening, pushing markets every which way.
I
So
would
that's
imagine.
definitely something.
I have no. This is me anecdotally speaking. By the way, I said anecdote is not evidence. Your favorite thing.
Mhm.
And then Wade said, but it did happen, so it technically is evidence. Maybe not very good evidence, but
It
reliable.
is at least a
Maybe
data point.
reliable. Maybe yeah, it's a data point. Maybe not reliable. I should have said data point to Wade. Damn it, you should have been next to me. But no. What about? I think what could happen, and again, I'm just here for kicks here. I think that they start signaling their policy. Like all of a sudden, maybe there's a flyer, a press release that comes out, and it's you know what, we're gonna have capital gains tax on unrealized gains. All of a
Absolutely.
sudden, and you're like, what? You know what I mean? And some of that is just bluster because the reality is that's almost impossible to get through, nor should it. In my opinion, that'll be my political signal.
You're getting a
But
little close here,
no,
Alex.
no, no. But it's true, right? There's no chance. You can't. There's like stupid stuff that's said.
Right.
And so from that standpoint, though, I think that's something that's added to the mixture there to
Absolutely.
stir the
And,
pot.
and
And
you
so
know,
the market doesn't know how to interpret that. And so you get these sort of
right.
swings, if you will.
Absolutely. And I think, we can actually use that as an example of how the market might look at that. Some of the things they might be considering. So, let's say Biden does come out and say, we're going to start taxing unrealized capital gains because, we can.
Yeah, exactly.
And the market's going to look at that and start okay, what happens if that's a true statement? How big of a deal is that? What's that going to be doing to his probability of the elect or being elected, of becoming the next president? And then, okay, contingent on him becoming the next president, what's Congress going to look like? What's the chance this actually becomes law? All of these things are going to play into it. What's the chance this is not just a campaign statement, as you just said, Alex? What's the chance he's actually going to try and do this? He's going to expend some political capital and try and push this through. There's a lot of different kind of machinations in play here, to really try and sort through, well, what's the actual impact of this statement? How is the market going to interpret that? And as you can start seeing, there's enough degrees of freedom here that this is not something that is easy to outguess.
Yeah.
Is easy to truly understand. Even something is, a statement like that. We're going to tax, unrealized capital gains as a big broad statement. Yeah, I think probably it's relatively safe to say the stock market's not going to love that. By and large,
No, no,
that
no.
will make
Not the stock market. The people that own stocks will not like that.
that actually is the next a really important point. That was where I was going next because
Don't
the
anthropomorph or whatever that word is.
anthropomorphize. That's right.
Anthropomorphized. Yeah,
Because the people who are going to hold those stocks, they're going to be
yeah.
less interested in holding those stocks. They're going to be willing to pay less for those things because it's, they're not going to get as big of a gain out of them. So, yeah. But once we start layering on these levels of complexity, these layers of uncertainty, making a statement beyond that, kind of
Yeah.
hard. And then also the countervailing effects. Okay, they're doing this to raise more money. How's that money going to be spent? There might be some bigger economic multiplier off of that. I don't know. And that might end up having a positive effect on the economy and the stock market and things like that. So there's a lot of just, you kind of have to step back, just like with any other piece of news, kind of got to step back a little bit and really start understanding, we're doing this for the long term. The markets, we've had a lot of presidential elections in the past, call it 100 years that we've got, reliable financial data for. And, that's kind of in the data to a certain extent.
Yeah. And you're look, at this stage you're going to see a lot of statements that are meant to appease the most common denominator of their party or the people that are in the middle, that can go either way
Mm-hmm.
at this point. And I personally just see that as all rhetoric. I don't see on both sides. You'll see a lot of silliness on both sides because when push comes to shove, and you get into the how the bill becomes a law stage of the journey, how much of this really gets through, in a manner that's significant. That's Bob's point. Then the you know theory meets reality, and you get what you get, right? So
Absolutely.
I don't play too much into that. But what we can, and the issues that you're facing now, listen, they're always going to be different. You can say, yeah, but this is a different election. Every year every election is the most important election. That kind of phrase, right? And so I don't put too much credence in that either. And maybe it's just the way I'm wired, from that perspective. But the larger point I'm trying to make is that every election cycle, there are significant issues at play that are different. But
Mm-hmm.
the economic valence or the personal valence that you attribute them to probably is the same amount from election to election. They're just different issues, but they're the same. They have the same level of importance, if you will, at least to me. Election cycle in the 1980s, 1984, 88, 92, et cetera, et cetera. They're all different issues, more or less. But they were, they were as economic, the valence of those issues were just as important. And so this is where I take solace in looking at just the numbers of how things played out. Because as important as you think the issues we're facing right now are, the issues that we were facing in 1980 were just as important to the continued success of this country. And so that's where I'm fine with looking at the numbers and not responding by thinking, yeah, but now it's different.
Mm-hmm.
It's different in like the letters we use to describe the issue, but they're all kind of the same. Right, Bob?
No, and I think another good point is when we're thinking about this, whenever anyone talks about the stock market and looking at, hey, this is what's happened historically, this, if we're not seeing exactly that same pattern now, there's always people talking about this time it's different. Think about every kind of big market movement that you've been seeing, the tech bubble. This time it's different. 2008 and the recovery after that. This time is different.
The real estate
the pandemic.
collapse. Whatever.
This time is different. That actually was kind of different.
No, but here we are.
Here we are. Yep. The pandemic is a great example. There was a period kind of in the spring, early summer of 2020 where, for like a month, every single day was one of the biggest 100 days the stock market had ever had. The biggest move the stock market had ever had. The S&P 500.
What a time to be alive, Bob. What a time to be alive.
Because there was just so much stuff.
Information. Yeah.
And it's it's not the same thing, but it's the same thing that we're talking about here.
Yeah. And so let's go to the numbers then. Oh, before we do that, we're going to have a more detailed breakdown of all of this. This is sort of a little chef's kiss, if you will, with regards to what's happening. Do you want to talk a little bit about that, Bob?
Yeah, absolutely. So, as Alex is talking about, we're going to be on June 25th, Tuesday, June 25th. So a week from when this came out, we're going to be having a webinar, the election and the stock market at 1 Eastern, which I would definitely really encourage you to come out for. We'll be talking through all this type of stuff we've been discussing, but getting into a lot more of the numbers and really understanding why what's happened is actually truly important and kind of how to interpret what's been happening historically. To sign up, just head over to risaprofile.com/podcast, and you'll be able to register for that session. It's something that I'm really excited to be talking about and really diving into the numbers. I think there's some really interesting stories that I think Alex will talk a little bit about here, but to really have the space to dive into them, we need to have that webinar. So if you want to dive into the numbers with us, which if you're listening to this, you probably like diving into the numbers, head on over there. Again, risaprofile.com/podcast.
All right. And now for the cocktail portion of this podcast, when you're in some sort of summer gathering, eating hot dogs on July 4th or whatnot, and you want to whip out some numbers. You said we had 24 presidential elections.
We've had 24 presidential elections, since 1926, when we've got good data on the S&P 500. So, one of the big questions people always ask is, which party is better for the stock market? Who's had better stock market returns, better returns for the S&P 500? This is an interesting question. I'm not sure how much I'd read into it. But, going by the numbers, Democrats actually have been substantially better than Republicans. They're on average for a year with a Democratic president versus a Republican president. the year with the Democratic president on average had about a 5.4% premium. The average Democratic president year had a return of 14.13%. The average Republican president year had a return of 8.74%. Now, some of this is the Great Depression. Calvin Coolidge didn't have a particularly hot record there for the Republicans, but not always. It's not the whole story. We can argue all sorts of different ways, about why this is. Maybe Democratic presidents genuinely are better, or put differently, they're not as bad as the stock market expected them to be as president. So, the market dipped when Democrats came into office, and then it came back up because it wasn't as bad as they expected.
There's the other argument that they're benefiting from the previous administration's economy and all of that kind of good stuff.
Absolutely, and when you do
again, the numbers are the numbers, but
the numbers are the numbers, and when you do put a lag on
there you go.
on the numbers,
what's a lag? What's a lag? Just so everyone
lag. So let's say basically you give the previous president credit for the next year of the new president. So for instance, if the next term here, the new president comes into office in 2025, the Biden would get credit for 2025, no matter who was in office.
So you're saying Trump will win?
So I chose a bad example there. So if we let's go back to the 80s. So Carter got credit for 1981.
Yeah, you get Carter credit for 81.
Exactly. So if Carter got credit for 81, it does smooth out the difference a little bit. But that premium still exists. It's not quite as big. 5%, over 5% is
that's
really
more than the value premium. That's like, I guess I would look at the standard deviations to see, but this would tell me, I think the T-score would be significant
big.
Here.
Yeah.
It's a sample of 24, but
right. But at the same time, it's worth keeping in mind there are some other weird patterns that are actually even bigger.
Well,
than...
I'll say this with a caveat. Even though I see this, in no way, shape, or form do I think the Democrats do better than the Republicans, or the Republicans do better than the Democrats, just by looking at this. I think there's just too much at play here that to be able to just say, aha, there it is. I see this more as a...
and it's important to keep in mind, the president is not a king. They don't have, they don't have like dictatorial power to control what's going on. And even if they
not yet, Bob, not yet.
No. And even if they did, there's no lever that they can pull that the economy is going to do well or the economy is going to do poorly.
Yeah, look at China. Look at a communist country. It doesn't work like that.
It doesn't work. But what I was getting at here in terms of the numbers is worth keeping in mind that, there are some examples here with even bigger premiums. Presidents who are over 6 feet versus short presidents like Alex.
I'm in the James Madison. I'm in the James Madison category.
That's right. Tall presidents like myself.
Bob's in the Lincoln category.
We have,
Are you taller than Lincoln? You're like 6'4", 6'5", right?
I'm 6'4", yeah. Tall presidents do substantially better than short presidents. There's an 8% premium for tall presidents versus short presidents.
But you know something I don't know.
What's that?
I know something you don't know.
What's that, Alex?
I'm left-handed.
Well, there we go. Now we're talking. Now we're talking because I don't know if you know this, but we've had a weirdly large number of left-handed presidents, basically in the 20th century. So to give you a sense, about 10% of the population is left-handed. So out of the 98 years I looked at, 60 of them, we had a right-handed president. 38 of those years, we had a left-handed president. And those left-handed presidents were a whole lot better for the stock market as well. They had a premium of 7.5%. And these are incredibly large numbers. If you look at statistical significance, the numbers are saying this is real. We really want to have that left-handed president.
Yeah. But
But
the point, I just want to drive home, the point we're bringing
yeah,
this up is not because we think there's any thing to being left-handed or to being tall or anything like that. It's just you're going to get numbers like this. Do I
yeah,
think, it's completely random that the Republicans have underperformed Democrats over the time period? I don't know, because there is some economics behind all of this at the end of the day, but I think it's just impossible to line it up and provide attrition to
yeah,
why the market happened, during this term versus that term and things like that. I think it's just there is some luck of the draw, going back to randomness, regard to the economic cycle in which you're elected president. But I think it's just tough to discern where
yeah,
what premium goes to who based on political
yeah.
affiliation
And
with a
I
lot of
mean,
precision.
a good example of that in terms of luck of the draw was Clinton. He was in charge during the 90s, during the run up portion
Yeah,
of the
exactly.
tech crash. And then he basically lucked out in terms of when he stopped being president. He didn't get the downside of the tech bubble.
Yeah,
So, there's
exactly.
absolutely some randomness here. And I that's kind of the point of bringing up tall presidents and left-handed presidents.
And then Bush walks into 9/11 on the second
Yep.
term or something like that, which is
Well, it was still first term.
no, but
Yeah,
the effects of all that kind of stuff
yeah,
didn't go
absolutely.
away.
So, I mean, it's also worth calling out. We don't just elect a president for the economic side of things, for tax policy and all this type of stuff. There's a lot of other stuff that we're looking at as we're choosing who the president is going to be, who we're going to vote for. But it is worth calling out that it's something that a lot of people are going to fixate on. A lot of people are going to look at those numbers and make judgment based off them. I'm not going to say it's wrong. The numbers are the numbers, but at the same time, you need to put that number in context and really think through what that's telling us.
I see this more as things you can't say. I wouldn't go out there and say Republicans underperform Democrats, but by the same token, I wouldn't go out there saying Democrats outperform Republicans because it's a political affiliation thing. I don't
Mhm.
I don't see that. In the same way I wouldn't say left-handed presidents are more brilliant than right-handed presidents because look at the numbers. I
Yep,
just wouldn't say that.
exactly. So,
What about
but well,
non-election years? Oh, sorry. Go on, Bob.
yeah, I was going to say, I mean, we can get into something we can make a little bit more of a definitive statement on, which is, starting to look at, election versus non-election years. And we touched on this a little bit earlier, which is that, during election years and especially during campaign seasons, during those election years, the markets move a lot more. Again, there's more information coming out. There's more new things happening that are giving us some information about, well, what does the future look like? And it kind of makes sense that the closer to the election you get, basically, the more volatile the markets are. There's just more uncertainty that's happening there. So we can kind of get into the specifics on the numbers there. I'll call that, and we'll talk through the numbers there. During our webinar again.
That's a good point. Yeah. And
Yeah,
for
because
those
I
that
mean,
may be
there's
listening in, what the webinar is, and we're practicing here on this podcast. We're trying to do live,
yeah,
quote unquote ads, if you
yeah,
will,
yeah.
as
He's
opposed to
stealing my work
Bob.
from me here.
Yeah,
So
as opposed to Bob just giving us these recordings.
yeah.
So
Um,
we'll get more detail during the webinar. When is that, Bob?
Again, that's going to be on Tuesday, June 25th at 1 Eastern. And to sign up, again, just head to resaprofiles.com/podcast. And you'll be able to register and get squared away. So it should be a lot of fun. And we'll really have that opportunity to dive into the numbers. But again, that big through line is honestly kind of the same through line that we have whenever we talk about new information
What
in
do
the
you mean by
stock
through
market.
line? I
Kind of
actually
the
lost you
same
there.
argument that goes through all
Oh,
this type
okay.
of
All
stuff.
right, I got it.
The same thing when we talk about, hey, there's the big thing happening, AI. How's AI going to impact the stock market? In a lot of different ways. I don't know what they're going to be. So what I would relate, or what I would focus on is, all of the information that we currently have access to, and we
Mm-hmm.
in the broadest sense, is already in those prices. It's already in, Microsoft. It's already in Apple. It's already in, the cement company, because it's going to impact them somehow.
Wow, but Apple's lagging in AI. They just had this
Well,
thing last
they
week,
had
and
that new announcement that looks pretty cool.
I don't know. I
So
don't know. I don't feel good about giving them information that goes to ChatGPT and blah 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 blah
yeah,
blah. More of a
so
Samsung guy myself.
you prefer to give it to Google to give them all
Yes,
that
yes,
information.
yes, yes, yes. I looked in their soul.
Yeah,
what
don't be evil. But
did
I guess
Bush
I
say
don't say
about
that anymore.
what did Bush
So
say about Putin? I looked in his soul. And I saw something nice, or
that
right, something like that.
was Trump who said that. Yeah.
No, no, no. It's Trump. I think Bush said that.
No, you're right. Well, I don't
Yeah, I'm pretty
remember.
sure.
Okay.
I'm not discounting Trump didn't say something like that, but I think Bush said something like, "Oh, I looked into his soul and he's good. We're good. We're
Yeah.
good here." Something like that,
Yeah.
which is hilarious.
That's
But
right. That's right. That was with Condoleezza Rice. That's right. So
oh, I like how you
okay,
threw
yeah,
that in there. Oh, that was with Condoleezza Rice.
that's
Shut up,
right.
shut up, man. Yeah, whatever.
Yeah. So, but no, I mean, I think at the fundamental level, though,
Yeah,
it makes sense that campaigns and the closer we get to elections are going to be more volatile. The obvious next question there is, should I be doing anything about that? Does this matter for me as an investor? What I would say is, yeah, sure. If you're day trading, yeah, sure. If you're, trying
yeah,
to time
exactly.
the markets and do all the crazy short term stuff. If you're focused on, long term, which we're focused on retirement. It's not something I'd be overly concerned about. It's definitely something that I'd keep in mind,
Look, I think you're
but at
making a
the
good
same time,
distinction. You're making a good distinction here. This is called Retire with Style, this podcast. And so ultimately, we're about, how to contextualize in retirement income and provide yourself with a retirement paycheck and what are the things that are important in doing so, right? Trying to outguess elections is not something that's important to having a successful investment experience that leads to a retirement income paycheck for you when you need it the most. So now to Bob's point, he's leaving it open, saying, "Listen, if you're a trader, if you're somebody of that ilk, yeah, if you feel you have some informational advantage over
Mhm.
others, okay, knock yourself out, right? But that being the case, if you think your informational advantage is you woke up at 5 in the morning and saw something on Fox News or on CNN, Cup of Joe or whatever it is, before before the 6 a.m. crowd, that's not it.
Mhm.
That's just not it. That kind of thing. And so have at it, but all you're doing is probably improving the efficiency of the market.
Yep.
You
Yeah. So
know?
I'll thank you for that.
Yeah.
But you're costing yourself some money there. And what I would say is, if you're listening to this and it's not on your private island, you probably don't have that informational advantage. It's something that is incredibly difficult. You have to be better than literally everyone else. The combined intelligence of
Well,
everyone involved.
the good news, and I don't mean this, Jim Simons passed away, so maybe maybe you have an edge now. Rest in
Yeah,
peace, Jim. So good
yeah,
news. I don't mean it like good for him or his family, but hey, the guy that kind of could do it is no longer among us. So have
that's
at
right.
it if you want a shot at the
Yeah.
title.
Well, Peter Lynch is still kicking, so he's
Yeah,
still
but
floating around out
he
there.
hasn't maintained. He regressed towards the mean.
Yeah. So, but no, I mean, it's one of those where, we want to be focused in on, the long term. We want to be focused in on, the next decade or two,
Yeah.
rather than, the next couple months.
And so in the
We're going to see weird stuff happen. That's just a true statement. The
yeah,
market's
no, I
going to do
get it.
something weird, but
So
that's kind of how we have to build our portfolios.
so then for the webinar, what for someone thinking about, okay, do I lock in or not? I heard the podcast already. The podcast is
Yep,
kind of a teaser into the webinar, frankly. We
absolutely.
just wanted to lay the groundwork of where we're coming from and things we're talking about. What should someone expect to get out of the webinar that you're having next week?
Absolutely. So, what I would expect to get out of the webinar, one, we'll actually talk through the numbers. So we'll put some actual numbers around this conversation and really, again, dive even further into that context. But the big, the big thing I would expect to get out of that webinar is a really deep understanding of, why it is that, we want to take that longer term view with regards to the election. How we can kind of look at what's happening in the market, look at what's happening, because of these elections, or this election, I should say, and understand what's happened in the past and understand how to think about what might happen in the future and why we want to be taking that kind of long-term approach. That's really the goal here, to provide that historical context, to provide that underlying understanding of what's actually at play,
Yeah.
and why it's doing
And
the
we,
things that it's doing.
and we want to do it now because, as Bob said, we're about to get into the thick of it.
Yep.
And so I would the best. Look, we're creatures of habit, and there's emotions involved, and the whole behavior of finance of things, the psychology of it all. And the best thing you could do to fight that, because we have certain mental shortcuts that we take and we're going to take. And so giving yourself a framework for thinking about things is actually the best thing you could do to sort of help you against your inclinations to maybe jump the gun when you shouldn't. And so I think Bob's is a masterclass on, look, objectively speaking, this is what is going on. This is what has been going on throughout the entirety of this great nation since the 1920s. Things are always different from one election cycle to the next, granted. And the next election is always the most important, as every news station will tell you, granted. But again, the importance levels of these issues have been repeated over time. And so I think what we're seeing is going to be very applicable to how you should interpret what you're going to be hearing in the next few months to help sort of ground you in your thinking.
Absolutely, especially from a investing standpoint.
Yeah.
Again, there's a lot more we want to be considering than just the pure economics and pure investing and who's better
100%.
for the stock market. But that is something that a lot of us are thinking about. So let's understand that.
Yeah, this is not about like human values or what. No. I'm serious. This is not about your views
Absolutely. No,
on
of course.
the religiosity of the government, yes or no, or things like that. We don't have a horse in that race, nor do we want it. This is more talking about how it affects the income portion.
Absolutely. So, and
There
again,
it
to
is.
sign up, just head to risaprofile.com/podcast. It's also going to be in the show notes here. So, it's something that I think is going to be really useful because, as Alex said, we're going to be getting into kind of a crazy time, and understanding that framework, understanding, what's happened in the past, can really help insulate you from at least this portion of the craziness.
And there it is. Thank you,
There
Bob.
it is. Thank you.
All right, everyone. Look at the show notes. There's a link to sign up. And Bob gave the URL, risaprofile.com/
podcast.
/podcast.
Yeah.
There it is. All right, everyone. Thank you for listening.